Good evening, everyone. Welcome back to another live sharing class. It is my honor to be able to host everyone here. As a gentle reminder to everyone, please remember to apply the knowledge you learn in my class and put it into practice. Continuous learning and practice will definitely improve your trading skills, which will eventually lead to more profitable trades. Our ultimate goal here is financial freedom. So let's work hard together to achieve it. We are all here to learn something new and advance our portfolio. So today I have a new topic to share with everyone, which is candlestick patterns. Okay, for today's contents, I choose to share with everyone which I believe is useful and important for all our members. This technique will be able to help everyone to have a clear understanding on how to read the charts. Besides sharing trading techniques, I will also scan for more profitable high quality stocks, share market analysis, and guide everyone in all trading aspects. So, I hope that everyone can be more skilled and profitable, and thank you very much for everyone's support. Okay friends, for today's content, I'll be covering 4 topics. I will also go over the updates of the Asia Pacific region competition standings with everyone. So let's move on to the stock market situation. Okay, in the past week, the overall trend of the Indian stock market has started to change. As the previous upward momentum has been altered, in the upcoming period, the market is expected to brew new trends, movements, or rhythms. Let's take a closer look at the specific situations. We will move on to the Nifty index first. Okay, in the past week, the Indian stock market has undergone a change, which can be seen as a shift in the bull market process. Let's first take a look at the situation from the Nifty index. From the weekly candlesticks chart, it is evident that the index reached a new high last week, followed by a closing candlestick showing a decline. The significant aspect is that this magnitude of decline in the candlestick is the largest since the uptrend at the end of October 2023, completely covering the previous candlestick and even surpass the previous 3 weeks uptrend when considering the highest and lowest point of the candlestick. This indicates a significant change of the Indian stock market. So, from a technical perspective, it is clear that the upward trend since the end of October 2023 has been interrupted, and a recovery in the upward trend would require reaccumulation of buying pressure. This means that unless there is a particular strong positive stimulus in the market leading to a direct uptrend, it is highly likely that the market will undergo a significant oscillation and adjustment at high levels, presenting a certain level of difficulty and risk for ordinary traders, investors. And of course, for our members here, such troubles do not exist because when it's our IPO applications or trading in UC limit stocks, we have further reduced risk for everyone, allowing everyone to focus on trading for profits. We have always been committed to providing high quality trading services and more advantageous profit opportunities. As everyone are aware, in addition to the ongoing trading of UC's limit stocks and 3 IPOs projects, there are other projects under negotiation. If there are any further development, I promise everyone I will promptly inform everyone. Okay, so that's all for Nifty. Let's take a look at Sensex index. Okay, as for the Sensex index also reached a new high before closing with a downward candlestick. Its general trend and the extent of the decline are similar to the Nifty index. Both of them erasing the gains of the previous 3 weeks. Typically, this kind of technical trend often indicates an implement market adjustment or a high level oscillation. While the historical high in the US stock market may have some positive impact on the India's market. The special trading session on the 20th already indicates that the Indian stock market operates according to its own rhythm and trend. This means that the market will adjust when it needs to, regardless of external influence, maintaining its own pace of operation. During market adjustments and consolidation, it is certain to pose some difficulty and risk for ordinary traders. However, we have always been committed, to provide high quality trading services and better profit opportunities. So, we encourage everyone to pay attention to our live classes and the content that is shared within the group for valuable insights. Okay, that's all for the two index that I would like to share. Okay, let's move on to the next topic, which will be microanalysis. So as for microanalysis, is always on macroeconomical data and news. Okay, we pay attention to this aspect. It's all because it allows us to examine the market from a broader perspective, especially since the current market is likely to enter a period of volatile adjustments. We need to conduct comprehensive analysis from multiple perspectives in order to develop trading plans and strategies that are more in line with the market conditions and have a winning advantage. Okay, let's take a look what I have picked for everyone and I would like to share with everyone. Okay, so we start off with this. Okay, for traders on Friday, bet that the Fed will not start easing its policy until May, weakening the financial markets' confidence in the face of the better than expected economical data and comments from the central bank governor. On Friday, a widely watched consumer confidence index rose to its highest level in 2.5 years, with Chicago Fed President Charles Evans stating that the Fed would not commit to a rate cut until it is more certain that inflation has begun to reach a healthy 2%. Futures contracts settled on the Fed policy rate fell, currently indicating a 47% chance of a rate cut in March, down from 55%, which is earlier in the day, just a week ago. The probability of a rate cut in March from a current range of 5.25% to 5.5% was close to 80%, reflecting a faster than expected decline in inflation. Fed policies themselves indicated at December meeting that the rate hikes might be ending and a turnaround might be begin in 2024. However, signs of continued strength in consumer spending last week and the struggle to conquer inflation have weakened confidence in the Fed imminent policy adjustments. Central governor, in the public comments, in the final week before the self-imposed blackout period, ahead of late January meeting, also hinted that a rate cut might not be imminent, although they can continue to call for the progress in combating and controlling inflation. the door is open for rate hikes later this year. So, once the Fed begins to act, traders are expected to see a series of rate cuts this year. However, according to futures contract, the current bet is that the Fed may only cut rates 5 times by the end of the year, 24 basis points each time, compared to the previously 6 rate cuts. Okay? So, let's move on to the next news that I would like to share with everyone, okay, which I feel that is also important. Okay, for India, foreign exchange reserve have been steadily increased since 2023, indicating the stability of India's macroeconomy and its ability to better cope with various economical challenges and uncertainties of the international financial markets. Foreign exchange reserve refer to amount of foreign currency and other international payment instruments held by a country. Sufficient foreign exchange reserve can be used to intervene in foreign exchange market, maintaining relative stability of the domestic currency. This helps prevent significant depreciation or appreciation of the currency and enhance the predictability and stability of international trades. Moreover, the adequate foreign exchange reserve are generally seen as a sign of a fiscal and economical soundness of a country. This can enhance the country's credibility in the international financial market, lower borrowing costs, and increase confidence among international investors. Furthermore, foreign exchange reserve can be used as a tool of monetary policy by buying or selling foreign exchange. The central bank can adjust the money supply, influence interest rates, and the level of inflation. It is evident that India's economy is growing strongly, with stable economical policies, all of which are crucial guarantees for the accelerated development of India's economy. Therefore, we have confidence in India's future. Okay, let's move on to the next topic. Will be Asia Pacific headquarters and IPOs. So friends, currently we are in the second stage of competing for the Asia Pacific headquarters, which is the stage of competing for the asset management skill. And we are now actually in a very intense stage. With the strong support of all members and also our trading of UC limit stocks last week, achieved very good profits. So, in the past week, the asset management skill in our India region has achieved a significant increase. So let me share some good news with everyone. Okay, the good news will be on the next slide. Okay, so let's take a look at the next slide and I'll share the news to you. First of all, I would like to express that whether it's the strong support of our members or the extraordinary performance we have achieved in our trading process, it is the source of our motivation to move forward. After the hard work of last week, we finally surpassed Japan in the asset management skill, and we are currently ranked second. Okay, it's a good result. Okay, I'm very proud of that. So as of last Friday, January 19, the result of the asset management skill competition are as follow. For India, we are standing at 1.242 billion pounds. And for Japan, they are standing at 1.186 billion pounds. But for Hong Kong, they are still remaining the first position, standing at 1.407 billion. Okay, although we are narrowly defeated Japan, okay, we surpassed them. It precisely proves that our efforts are in the right direction. It is also everyone's support of every one of you, okay, that we can achieve a faster growth in the asset management skill. With all your support, my team and I are more confident in winning this asset management skill competition. And we will move from one victory to another victory. However, it is obvious that our victory cannot be achieved by just chanting slogan. Okay, I don't believe that. Okay, it's all about hard work. Okay, my team and I have been working really very hard for a stable asset growth. Just in the past week, we achieved an overall profit rate of 77% in trading UC limit stocks. Although the trading results of each member is different, I believe that profits gained and the growth of the account asset are substantial. Although the stock index experienced a significant adjustment in the past week, it did not affect our profitability. On top of that, in further our asset growth, I believe that our asset scale will also achieve rapid growth this week. On one hand, we have been tracking robust UC stocks for a long time, and I believe that this week will continue to bring substantial profits. And during the same time, the IPO we applied for on the 15th will be listed tomorrow. Although the IPO quota for the 15th is not really large amount, I believe that it will also contribute to the overall asset management skill for the India growth after listing. Personally, I expect that the asset management skill in our India region will experience explosive growth next week because the Additive Learning Technology Limited IPO that we apply on the 19th will be listed next week and bring us a huge profit. Okay, I believe that it is foreseeable for the asset management skill in our India region to achieve high growth rate again. And at the same time, for our India region, we'll definitely be able to eventually win in this asset management skill competition. Okay, so I would like to thank everyone for all your support on this. Okay, let's move on. Okay, Additive Learning Technology Limited. So, due to today is a full day stock market close, okay, NSE has issued a latest notice indicating that the subsequent schedule for Additive Learning Technology Limited IPO will be postponed by 1 day, with the application deadline extended from 23rd to the 24th. The specific date are followed. Okay, for IPO opening date, which is on the 19th of January. Okay, for the IPO close date will be on the 24th of January. And the basis of allotment will be on the 25th of January. And for the listing date, that will be on the 30th of January. Okay, so this is an update for everyone. So maybe you guys might miss out or you would like to know more. That's why I share everyone with this. Okay, as mentioned before, we have applied for a relatively large quota for Additive Learning Technology Limited IPO. And we have also signed relevant cooperation agreement, okay, with the underwriter. So everyone can rest assured that they can continue to apply until 24th of January. Okay, those who are not yet apply, I will urge you guys to do it soon. Okay? Okay, let's take a look at the next slide. As of Friday, which is on the 19th of January, at 5 p.m., according to NSE data, Additive Learning Technology Initial Public Offering, which is the IPO, received bids for 6,229,000 shares, while only 429,700 shares were available for sale. So the subscription rate ratio for this offering is 14.49 times, indicating an unusual strong demand. Okay, this can be described as a frenzy at the IPO party. I would say it's a party. And it is undeniable that additive learning technology, professional business project, is the key to ignite the market. The company operations are highly professional and exclusive, making it difficult for new companies to enter the industry and make an impact. So in other words, this company has a competitive edge. Furthermore, during the fiscal year from 31st March 2023 to 31st March 2024, okay, additive learning technology revenue increased by 80.41%. Okay, and the post-tax profit, which is PAT, increased by 603.63%. This is not demonstrated its strong operational capabilities, but also provides investors with promising profits prospects. Investing in additive learning technology is like boarding a very promising ship with unlimited potential. Fortunately, after a super long and very tough negotiation that I went through with the underwriters, okay, we have secured a larger IPO quota, giving everyone a better chance to being allocated shares during the application process and thus reap more profits. Okay, it's actually a very tough meeting. Okay, let's take a look at the next slide. It will be more interesting. So, additive learning technology IPO fully booked in less than 1 hour of opening. Okay, so retail investors in less than 1 hour is fully booked with oversubscription in the retail segment. According to data, okay, the retail portion was oversubscribed by 32.64 times, and for non-institutional investors is by 20.74 times, and qualified institutional buyers, which is the QIB, subscribed 6.65 times. So this is important to note, okay, that IPO gray market, premium market, which is GMP, for Additive Learning Technology Limited is at plus, okay, a positive 121 positive. According to investorgain.com, this indicates a premium of 121 rupees in the grey market for additive technology shares. Considering the upper price brand of the IPO and the current grey market premium, the expected listing price for additive learning technology is 261 rupees per share, which is 86.43% higher than the IPO price of 140 rupees. Okay, based on the grey market activity over the past 14 trading days, today's IPO GMP is showing an upward trend, indicating a strong listing. According to analysts at investorgain.com, the lowest GMP is 0 rupees and the highest is at 125 rupees. This is the only situation on the first day of subscription, and there are still 4 days left When the market experienced a frenzy, it signified that the IPO allocation is unable to meet the demand. And some investors are willing to pay a higher price for shares after listing. So, it is important that to mention price are only for the IPO listing. What about after the listing? Have you guys think about it? We have conducted a thorough research on this company and are optimistic about the future of this company. Therefore, we have secured more IPO allocations due to the current high market enthusiasm for the company. It is also represent a strong belief in the company's potential. We anticipate that the stock price of the company could potentially increase by more than 5 times within 6 months after its listing. Okay, this is a very, very strong company. Okay, that's all for IPO. Okay, let's move on to my classical tactics for today. As I mentioned, is candlestick patterns. We'll continue to learn, okay, new and important technique strategies, which is a classic candlestick strategy. Today, this learning is gradual. Okay, I believe every day you learn something new, it improves your trading skills. Okay, I've noticed that the importance of the rhythm in this process. Every day you learn something new is better and better and get better. Okay, this is how I learn myself too. Okay, non-stop of improving your own. So everything have step by step, take it slowly. Okay, do not rush yourself to learn as much as you can. Most important is to understand, okay, the things that you learn, make it put into practice, and have confidence in what you learn and what you practice. Okay, at the same time, you must persist in learning and applying the techniques. Okay, you must apply, because learning without practice is actually useless. Okay? Okay, let's move on. Okay, let's take a look at what the candlestick pattern tactics really are. Okay. In fact, we all know that candlesticks chart directly represent prices, and candlesticks pattern are the basic unit of candlestick analysis. The candlestick pattern is formed by a single candlestick, 2 candlesticks, or 3 candlesticks, okay, or more combined candlesticks. In candlestick pattern analysis, it is generally believed that the credibility of a K line is less than that of a double K line, and the credibility of 3 K lines patterns is even greater. Technical patterns formed by multiple K lines have a stronger credibility in grasping the market operating space and trend. So, to analyze market trends using K-line patterns, or we call it candlesticks patterns, one must be familiar, okay, must be first familiar with the graphical characteristic of various K-line patterns and their market significance. So today, we will list the more important multiple K-line patterns, okay, so that you guys can understand, okay. So one thing to note is that candlestick charts are the most fundamental and important aspect of all technical analysis methods. Okay. As a reminder, okay, to investors that no matter how large the market movement is, all developed from subtle clues. Those who first grasp the clues more accurately can avoid more losses and gain the maximum profit. Okay? So, the next important question to consider is, since we learn want to learn about the candlestick patterns, how many types are there? How many different kinds of candlestick patterns are there? I can tell you clearly, it's actually countless. There is too many different type of patterns. Why? Some people might ask me, why so many? Why there is countless? I thought you say there's a few only, right? But the truth is, because of the same market and the same technical chart, different traders can summarize and derive countless experience or methods due to different perceptions. Therefore, it can be said that there are countless patterns techniques. You guys understand on this? The only difference lies in whether they are widely applied in the market. Of course, we cannot explain all the patterns techniques that have appeared in the market in 1 or 2 days. It takes actually very long if you want me to explain everything. Okay, but for today, we will only share with you guys those tactics that are most widely used and have the highest success rate and are the most classic in the market. Okay? Okay. Let's start off with the first type of the tactic, okay, the pattern, which I arranged for everyone today. I call it rising relay pattern. Okay, you guys might not hear the term before. Okay, it's not really common, but for me, I always use this method also. Okay, this type of formation is currently a very classic and highly practical technical formation. So, you guys might ask, what is a rising relay pattern? Okay, later we have charts to show you guys and you might understand a clearer picture. Okay, but let me explain first. Okay, it refers to a situation where the stock price continues to rise for a period of time, followed by a large volume of high proportion turnover. And then, after a sufficient turnover in the market, it resumed the upward trend. Okay. Moreover, the momentum and amplitude of the second outward movement are often very significant. So, as the name suggests, okay, rising relay pattern, it refers to a consolidation during the outward movement, which is a continuation of a previous trend, rather than impending reversal, with more momentum in the future. Okay? Okay, let's take a look at the next slide. What are the requirements, okay, for this formation? So, there are 2 points. Point number 1, the stock nature should be relatively active, preferably strong stock in the sector. The first outward movement should be stronger, and it's best for the stock price to break away from the bottom with a gap up breakthrough. Okay? For point number 2, the trading volume should be significantly increased, showing the behavior of the main force rising position. The stock price fluctuates a little, and there is a continuous decrease in volume during the pullback period after a previous sharp rise. Okay, how should we apply the classic rising relay pattern? Okay, in actually practical trading. Okay, so I believe I always will explain how do we use it, right? Okay, when this trend appears, investors should enter the market when trading volumes of the stock reduce. Okay, trading volume of the stock reduce. The movement average diverge upwards, and the timing is just right. They can also intervene when the stock breaks through with increased volume at critical turning points. Okay, so as I say, I always prepare charts for you to take a look. Okay, so we move on to the chart. Okay, on this chart, okay, just now I mentioned of drop in volume, right? Okay, see, there's a drop in volume and a gap up. Here is a gap up. Okay, so as shown in the figure, the stock broke through upward gap, okay, which is a gap up, and rebound after a low level of oscillation adjustment. Okay, and after a short period of rise, it begin to enter oscillation adjustment mode. Okay, at this point, it enter the rising relay pattern. Okay, what I say about rising relay pattern is the one in the purple square, okay, or rectangular, okay, which is over here, okay, oscillating. During which we will find that the trading volume is constantly shrinking, is dropping. Okay, so when the stock price suddenly breaks through and rise sharply in one day, okay, the trading volume also increase. This is the perfect time for us to buy. It is highly probable that there will be a rebound and rise in the later period. Meaning, what I just mentioned is that a sudden breakthrough, okay, which is over here, a rise, and with the increase of volume. Okay, these are the things that we take note of, and it's the best time to buy. Okay, let's move on. Okay, the next pattern that I'm going to share with everyone, which I normally call it double green candlestick pattern. Okay, so what is a double green candlestick pattern? This candlestick pattern consists of a bullish candle followed by two or three consecutive bearish candles. Something like the picture in the slide. And then another bullish candle. Okay, this last bullish candle should exceed the highest point of the recent bearish candle. Okay, or come close to the highest point. Either point. Okay, this is a bullish candlestick pattern. Okay, let's move on this. Okay, let's take a look at a practical application for this double green candlestick pattern. Okay, for point number 1, the appearance of the last bullish candlestick must be above the 5-day and 10-day moving average. Okay, in an uptrend. This indicates that the double green candlestick pattern must appear in an upward trend. Okay, upward trend. Okay, for point number 2, the position of the oscillation indicator should not be too high. Okay, a high position indicates that the stock price is at a high level, which carry a certain risk. Okay, for point number 3, popular stocks. Okay, active trading volume. The trading volume of the last bullish candlestick must be a significant increase, while the middle 2 or 3 bearish candlesticks needs to have a decrease in volume. And the volume should decrease as quickly as possible. Okay, let's move on to the next slide for a better understanding. Okay, as I mentioned, I always use charts. Okay, so let's take a look at the chart. Okay, for the stock price is an upward trend. Okay, after a short period of upward, it begins to experience a pullback. During this pullback, the volume accelerate and then diminish. Okay, you can see the place that I circle yellow, which is over here. Okay, after the pullback to the support level, which is over the support level, a large bullish candle, okay, a large bullish candlestick appeared with an increased trading volume. This suggests that the uptrend is likely to continue. If you haven't bought any of the stocks, you can buy at this point. Okay, and if you have already buy or have a position on it, you can continue to add more to it. Okay, let's take a look at the next trend. Okay, next one will be next pattern. Okay, so next we'll be talking about this another pattern called bottom convergence pattern. So first, let's look at the characteristics of this bottom convergence pattern. For bottom convergence refers to continuous formation of two bottoms at the end of a downtrend. Okay, the first bottom is slightly sharp, while the subsequent bottom is relatively flat. And the combination of the two forms a convergent pattern. The first bottom of the bottom convergent pattern can be seen as the best, okay, probably the support level below. When the second bottom appears, it indicates that the bears have launched an attack, while the bulls resist against them. Okay, so it becomes a bull and bears battle. Okay, at this point. So, and if the stock price ultimately rise, it only means one thing. It means that the bulls have won. Okay, the bulls have won the battle, and the price will continue to rise in future. Okay. Okay. I prepared this chart. Okay, so let's take a look at this chart. This is a form of bottom convergent pattern. So, do you see any signs of the price convergence in this pattern? Okay, of course, what is called is not really that important. Okay, what important is that we can use this pattern to make real profits in trading. Okay, so what kind of pattern that may look very simple? Okay, this kind of you might think that, oh, all the charts are normal, it's simple to understand, but how much do you really know about it? Okay, do you actually go and see it and actually find more information about it and try to apply the things you learn? Okay, but without a lot of practical applications, it may not achieve any ultimate profit effect. By looking at it, you think it's easy, okay, but without any learning and apply, I don't think that anyone can make any profit out of this. Okay. Okay. Let's take a look, okay, at the practical application. Normally, I also explain how to apply, okay, for this bottom convergence pattern. When the stock price starts to rise on an increasing volume, after converging at the bottom, it indicates that the pattern is complete and a buying opportunity has emerged. Okay. First point, the two bottoms of the bottom convergence patterns should be roughly horizontal, with the second bottom preferably slightly lower than the first one. So if the stock price makes a new low at the second bottom, while the MACD histogram does not make a new low, resulting a divergence between the stock price and the MACD histogram. The bullish signal of this pattern will be more reliable. Okay? When the bottom, okay, for point number 2, when the bottom of the pattern appear, it is preferably for the stock price to position themselves well below the medium and long-term moving average, ensuring that there won't be any too much resistance when the stock price rise in the future. So, as shown in the chart, okay, like bottom conversion pattern, okay, this is one of the chart that I choose to share with everyone. Okay, after the second bottom is formed, we can see a divergence between the stock price and the MACD indicator, okay, which is over here. Okay, see, after the price converge, the volume increase, which is the right time to buy. Okay, this is the right time to buy. Okay, because after that it start to rise. Okay, so if the price move further away from the moving average, and there is significant increase in trading volume, okay, you can see that the volume from here, which is so low, suddenly it increased so much. Okay, we can consider buying a small portion. Okay, do not throw everything into the trade. Okay, start off with small positions. Okay, we have to monitor. Okay, we have to monitor first, see how it goes. So we put in small portion. Okay, as there is little resistance at this kind of point. However, if the stock price is very close to the moving average below, okay, it is better to wait. Okay, it's better to wait for the stock price to break above all moving average before buying. Okay, as all resistance will overcome at this point, and we can expect a significant upward trend to follow. Okay, so there are things you have to actually look into the chart and monitor. Not say that you think that it's right time, you throw everything in. Sometimes we start off with a small position first. Okay, if it goes as what we think and the trend is right, we add our position. Okay, so in practical application, we need to constantly summarize similar methods, because only through continuous summarization then can we develop our own high winning rate method. Okay, because as I told you before, we have different kind of traders. We have traders that is aggressive, we have traders that are passive. Okay, some aggressive traders, they see chance, they start off early. But for passive traders, they choose the more safe road. They will wait, okay, until there's a clear sign, then they start to buy in. Okay, so for you guys, okay, whether you are an aggressive trader or a passive trader, okay, everyone should have their own trading methods and trading styles. Okay, I cannot guide everyone to use one method because it might not suit you. Okay, for myself, I go on both ways. It's time to be aggressive, I'll be aggressive. If I think that it should be passive, I will take a passive route. Okay, so once again, I will tell you guys, it's all on your own. The more you learn, the more you practice, the better you get. Okay, so at the end, I want to tell everyone, please practice more. Okay, it's good for yourself, and it will improve your trading, and you have more knowledge on that. Okay, and today, okay, will be end of my live sharing class for today. So thank you very much for everyone to join us and giving me all your support. And we will continue our live class on this coming Wednesday, okay, on 24th of January at 8 p.m. And I hope to see everyone here. And thank you once again, and have a great night.